Well, of course, it is Good News Friday, and we have good news today. People who saw my thumbnail yesterday that said that this was bargain hunting time. This is a Tesla stock on sale, hopefully bought this morning at 236, and then rode it up to 250 again. I don't know, Brian. I don't have any dry powder, so I wasn't able to do that. Maybe you did.
Powder's dry, permission not there. Someone, I can't discuss who is it, the permission.
Yes, well, I did mention it to one of my personal friends who sometimes pays a little bit of attention to what I'm saying about these things, and I don't know whether he took advantage or not, but certainly the pattern played out as well. I said this morning, I don't want to kid anybody. I said this morning and yesterday, hey, it could go either way. We could definitely go down and test 225. We could definitely have a bounce back. And I think partially today, obviously the entire stock market bounced back. So that was probably at least a piece of the reason that Tesla was also doing well today. You had a theory. I saw your theory, I think, on X about what happened yesterday. I'd already explained my theories about it, but go ahead. What do you believe that the 20 point, whatever it was, 8% drop yesterday, 30 points from the high, was all about 8.8 being rumored to be canceled?
Yes. So I think we'd had a video on my channel where we discussed that, and basically that it was a trigger event. And one, we had a big run up. So people were looking for an excuse to sell, and that was the excuse. But that, and it happened just faster, in 5-10 minutes instead of over the course of a week. Because it just had gone down from 270 to 236 over the course of a week or two. It was like normal pullback, right? So it's just a surprise faster pullback. But the whole reasoning behind the Bloomberg thing, the scrambling around talking about it, they said it was because there weren't enough prototypes, that internally Elon would delay the event so he can get more prototypes. Elon did not say there'd be prototypes there. He's not saying, okay, there must be prototypes at this event. And then if there were a bunch of prototypes, if he did show 3 or 4 prototypes, the Gary Blacks of the world, the analysts of the world would say, well, so what? You have to go build them, which is true. You have to go build the prototypes. Right. So if that's the case, why would you delay the event for prototypes? Right. I must show a design locked vehicle. They never done that before. So, and then there's no rule about only one event. There's some like, oh, there must only be one event, because I've got 8.8 stuck in my head. There only can be one event. If you don't do an 8.8, this event, that thing, then you can't do one October. It's for both. It's like, what are you talking about? I can do 8.8. I can something else to show you. I can show you in October. Anytime Elon says, hey, come on over and see some stuff, everyone's going to line up and go see it. Doesn't matter when or whatever it is. So I say the whole statement that they're going to delay makes no sense. Because one, if you say to the world, I'm going to have an event on August 8th, it's because the stuff I already have, the stuff I'm ready to show is ready to go.
Yeah.
In terms of stock movement on that, for me, like all the people saying, okay, the Robotaxi, even if they have it working, even if it's like doing 10,000 miles, they won't make a penny, they won't make it whatever, because they have to like get to regulators and do all that stuff. If it's working great, FSD is working great, they will sell more FSD, right? The attachment rate, right now it's up 400,000. The sales will slow down. It's 3 to 5%, 10%. If they get that up to 15%, that each one of those sales is like a car. Right. So if I get 10% more sales on 2 million cars in the United States, old and new, that's 200,000. It's like I got 200,000 more cars. Right. A huge thing. If I do it in China, go in, they currently do not have any FSD sold in China, or permitted. Also almost 2 million cars there. They get 10% there, 200,000. I think the adoption rate in China is higher because one, they don't have any sales. US rate is 400,000. Right. You get big sales in China where people love technology because they're already saying, the ADAS driving system, the driver assist with LiDAR, those are anti. like I must include that in my thing. So that would, one could be 400,000, 500,000 FSD sales in China, like
Right.
the problem 500,000 cars. And it could increase car sales because now you have better, you're the technology leader, right? And that means something in China. So all those things are what matter. So that is what Elon said, miles per intervention. My personal number is about 2,000 miles per intervention. You get to 2,000 miles per intervention smooth, off to the races. Licensing deals start happening like crazy. It could even happen at 1,000, but at 2,000 miles, I think that's the number where you get past that. And then if you get to 20,000, then you have the equivalent of hyper mapped Waymo or the best of everything anywhere in the world, and then you're utterly crushing it. And then removing the drivers, I just did a talk with Herbert on that, is that even if it works great, the regulators will have you keep the safety drivers in for like a year.
Hmm.
In my opinion. In China, the regulatory thing is you must have at least a remote driver
Oh,
for every 3 cars.
okay.
So that's the national standard, right?
Nice.
So until you have the data to say lift that standard, you're going to have those things. But it's irrelevant to, I want, if like Apollo Go, if Didi, the Uber of China, says, I want to dominate robotaxi, I do that with safety drivers first, a million, 5 million, I fix the economics better 2 or 3 years down the road.
Yeah.
But that means I must get cars.
Yes.
Is only Model 3 and Model Y, if 12.5 drops this year, 12.6, even to Q1, no other vehicle will be ready.
Right.
Cybertruck kind of ready for 12.5. Any new vehicle that you have to have FSD adopted to it. It will take time.
Right.
So for the next year,
So
any kind of meaningful volume of Model 3 and Model Y.
So I think if I understand what you're saying is that if the only way that these Chinese companies that are already doing some kind of robotaxi sales, robotaxi services rather, the only way that they could expand as fast as they probably want to expand and really dominate the markets would be through the purchases of Model 3s and Model Ys. No other car is out there that they can go buy 50 or 100,000 next year.
Right.
So that'd be a huge boon. And of course, these companies are now talking about it in China. We've had at least 3 Chinese companies that have talked in terms of the FSD system, or they are testing already in cities in China, or in the process of getting ready to test Tesla cars with FSD. So that's a pretty strong potential there. Any kind of an announcement on that, of course, would be a big stock driver.
Right.
So, okay, so you don't think that it matters. I don't think it matters. I already said a couple of times last night and this morning, I don't think it makes a bit of difference whether the event is on 8/8 or 10/8 or 12/8. What matters is when they are actually, what really matters, I think you just said it, is when FSD gets to the place where it is level 4, level 5, where Elon says, and he said the other day, he says, it's probably going to be a matter of Tesla will be responsible for the liability. That's a very easy statement to make because it's going to be true. I can tell you I know I'm not a practicing attorney, but I think from my understanding of the law, once that car is driving itself, Tesla's liable. I don't see any way around it. But so you make the statement about something that's already going to be true anyway. You just say it out loud. Look, from today on, if your car is on FSD, you do not have to be driving. You can be in the back seat. You can be reading a book. You don't have to touch anything. And the car is responsible for any accidents it causes. Obviously, if another car runs into it, that's a whole nother story. So
the other reason why I'm so bullish on them doing it in China, because various people say, oh, China doesn't make sense, China makes sense, is that huge lawsuits, huge settlements for accidents is a US thing.
Right.
No other country does that.
Right.
And especially China doesn't do that. Right. So if you have an accident in China, unlucky for you.
Yeah.
Unlucky for you. But you don't get a bunch of money.
Right.
Maybe some property damage fixed, you get some insurance coverage, right? But there's no huge settlement.
Right.
It sucks for you that you're now, crippled or something like that, or you're dead. You may get like 25 grand, 50 grand. Like if you look at those things where the plane crashed, right? In Asia or something like that.
Yeah.
How much do they pay? 200,000, 300 people died in a Boeing crash. How much do the people get in Korea or Thailand? 25K, 50 max, only because it's a US company. It's nothing, right?
Yes.
So, or relatively nothing, right? So it's one of the things where you want to increase the safety, and if you statistically do it, then it's all good. You won, and you're reducing the number of accidents, right? But the lotto thing of like it happened to particular individuals, it sucks, but it's you're not gonna get a big settlement. So that is another reason to do it in another country other than the United States in a major way. You still do it in the United States,
Sure.
come with other data, but
yeah. So we had this pullback on my program over the last couple of, actually, I guess it was last night. We were talking, Bradford and I were talking about whether this was some kind of a, that the market now was going to go through some kind of a rotation out of the Magnificent Seven and into the Russell and into some of the other stocks in the S&P, whether this was a situation where we were seeing a real blow off, which I've been expecting and talking about for a long time in terms of the entire S&P going down 5 to 10%. And then, we wake up the next morning and it's all been reversed. The Dow is up strong. The NASDAQ's up even stronger. The Magnificent Seven all rebounded. Well, not all, but most of them rebounded. And Tesla rebounded, most of the losses from yesterday, at least up to the they were back up to 250 and a little more in the after hours out of the 263, I think, which was the closing high. So what do you think about this whole idea of, are we going to have a continue? I mean, I know it's all speculation, but is the bull just going to continue on now? Are we in a was that the start of the rotation and we just have to see it develop more over the next weeks? Or what do you think is going to happen next?
So if we look at the last couple of decades, 3 decades, right? Then if you look at the chart, NASDAQ or something like that, or S&P, it's pretty much always going up.
Right.
The big pullbacks, 2008, 2001, those are the exceptions.
Right.
Right. So when people say, oh, the bull is bear, 2 choices, they think it's 50-50. Right. No, it's actually like 80%, 85, 90%.
Right.
Bull.
Up and to the right. Yeah.
Up and to the right. And also for the Magnificent Seven thing, they're magnificent because they're fantastic companies, tech companies are crushing it.
Yeah.
Right. It's like, oh, when does, IBM come back and kick Microsoft's butt? Never. Right. So, but it's more like, when do they die? Right. So, betting against the big tech companies, like, yes, you can try and time some kind of like swing, some kind of pullback and that kind of thing, but most people suck at that. It's why, thinking that they can is why they're underperforming the index, right? And the index is now like 50% Magnificent Seven.
Right.
Yeah. So if I'm looking in the future, if I just say like me as a futurist, right? And I say in 2030, what's the company that's going to be there? Who's going to be the $10 trillion company? Right.
Well, we know who's going to be the first one.
Right. Right. SpaceX, Tesla, those the guys that are going to be there. NVIDIA is probably going to be there too. Right. Apple, probably not. Apple has difficulty because they're doing it with stock buybacks during cash. But if something takes out their smartphone stuff, they're done. Google could lose too because of their the AI queries are taking over the search.
Right.
Right. So they just have domination to lose there. Right. So I would look at it more in terms of like in 2030, in 5-6 years, maybe 10 years, I think people can see the very likely winners. I can say, okay, I need to spread my bets. I need to like pick 5 or something like that, right? But in terms of like saying, you know, right now things are in transition a lot. AI is going crazy, exponential. Picking out what month, what week does the breakthrough happen? You know, like energy, it drops. You know, for Tesla, goes up 134%
Right.
this quarter, right? We thought it was gonna be 4 quarters ago, but it happened now, and people thought it'd be never,
Right.
right? Or you know, like you look at Gary Black's thing out to 2030, he has energy at like 120 gigawatt hours or something like that on
Right.
2030,
Right.
right?
Right.
And contributing like 10-15% to a small amount of that kind of thing. So that kind of more linear thinking on the technology that we're dealing with now is the problem, because we definitely are going exponential. But the exponential thing means that we can get over our skis, that we think, okay, it's totally going to go like
Right.
double every quarter and that kind of stuff, and then we'll be wrong. But then if it's going fast, our mistakes are, if we're actually going fast, when Tesla's in 50% growth, then okay, you made a mistake. In 3 to 6 months, it's grown into its valuation. Same
Right.
thing for NVIDIA. It's going fast. It gets overhead, pull back 20-30%. Next quarter grows 15% on profits. Next quarter grows 15% on profits, and then your 30% overestimation is gone, right?
So I just had this crazy idea as you're talking about it. It could be that all of the companies that will be in that top 5 will be humanoid robot companies.
Right. Right.
It really could be because the components are so huge that it could be that would be all of the winners, or something like that. In other words, it could be, as so many people keep pointing out, NVIDIA is really just picks and shovels, although they're trying to put the next layer on it. They're trying to do a little bit more of excavating at the site, I suppose, but they're unless they get heavily involved in the actual app side of it, the application side of it, or the embodiment side of it, then they may not continue to be. I mean, there's going to be a point at which the All In podcast talked about that again today, that there's just a point at which these companies cannot continue to buy trillions of dollars worth of capacity without having an ROI. And the ROI is going to come from the kinds of things that Elon's doing. He's actually putting muscle. He's actually putting these, embodying them in energy solutions, in labor solutions, in transportation solutions, etc. And those all are going to be winners. I mean, over time, where AI has obviously got an application.
So if we think back to the days of the emergence of the personal computer,
right?
So you had the picks and shovels, you can kind of for the picks and shovels,
right?
Being Intel for the chip, and Microsoft for the operating system, and then for the main productivity software. And so then you had a proliferation of PC makers.
Right.
So, and then PCs went from a very small number up to 3 billion or something like that, right? So the growth was there and it happened. But there was a consolidation on the PC maker side.
Right.
So you could have a Compaq, whatever some of the others, Acer. Yeah. So it was a laundry list of companies, and then they could succeed and be profitable for a while.
Right.
They have a strong 5-10 years. They can even be application software guys there. So various winners in various forms for a while in a growing market. Right. But then you have some kind of correction purge, right? Where things start getting eliminated.
Right.
It could take longer for Humanoid bot for that to occur, right? And some companies might last longer than some companies, but at some point there will be a thinning of the herd.
Right.
It's like an internet. Okay, things are going great, everyone's making money, or everyone's stock is going up, and then boom, 2001 happens, and then the web vans and other things go away, right? So I think that there will be an extended exuberance period for humanoid bot, but that I'm thinking end up being fewer winners down the road, but how long that takes to play out is unclear, and also depends on the execution of each of the companies
Sure,
and which countries are doing things.
Yeah, I mean, clearly, as with all things, right now we've had, I don't know, hundreds of companies start up EV car companies, and hundreds of companies have already gone by the wayside. And some of the other ones like NIO and whatnot are barely hanging on by their fingertips. So, you'll have this thinning all the time as things go along. Tesla, of course, positions so well on so many levels, even in terms of their cash balances and whatnot. No debt, plenty of capacity to raise more capital. I mean, they're positioned so well, which is why it continues to drive me crazy that the street doesn't get that basically none of their competitors are positioned as well in terms of their cash. And also their return on invested capital, which is, I know it's a little arcane, it's a little bit in the weeds, but if you have consistent capability of getting a lot of money out of every dollar that you invest, that should be a real signal to the people that are making financial decisions in terms of where to place their money. So, okay, so we agree that humanoid bots will be probably the number one driving force for some company 10 years from now to make it number one in the world. There might be one or two others potentially that would be in that same ballpark, and then it might be transportation next. It might be Robotaxi as another one of those top five. Because again, there'll be 100 companies that get into it, maybe 1,000 companies, because it's not going to be that hard to get into it as a fleet owner.
Right.
But then there will be probably some surprise add-ons, just like there was with the iPhone. There'll be surprises of how these fleets get utilized up in the future. I think, in fact, to your favorite subject, the FSD on trucks will be a bigger deal than the FSD on cars, and that could also open up the potential for rented fleets or fleets that are pay-as-you-go kind of situation like a car.
But you can see in terms of like an imagined future winner of robotic trucking.
Right.
If I'm a country like China,
right,
and I have 10 million trucks because they're moving 50% of the goods, whatever, of the world, right? You would not allow a foreign company to do that, right? So you can have them buying, like Tesla's software and other stuff like that. But the entity itself, that, they let Tesla have 100% ownership of the factory, mostly 50-50, right? Where it's like, and most, so they would have to have at least a 50-50 relationship for, China robo trucking.
Right.
If China robo trucking, one dominant guy with 80%, another with 20%, like that, you probably want a couple, because, this would be strategic. I'm moving everything around my country.
Right.
Right. So I would see that as being, India, Japan, countries would say this, we have to have some nationalization of this. We can't just let it go.
Right. Yeah. Absolutely. So and of course there's going to be some kind of communication. So that would be, some kind of, whether it's a phone, which it may not be, it might be your contact lenses and some kind of a device that's implanted in your jaw. Like there was a what do you call it, a book series years ago called Left Behind in the Christian world. And in Left Behind, I mean, this is like, what, 20 years ago. And the guy had the idea, that you would have a listening device that would be implanted, like we have. And then you would have a speaking device, which would be implanted in your tooth. And that would be how we would communicate. But something like that in the future, it will still need to communicate outside of your immediate self to a satellite or to some kind of ground system in order to be able to let people communicate with one another, with companies, etc. So once again, SpaceX, you've talked about this. all the way back when we wrote the Elon Musk mission, you were talking about it then, is that Tesla, I mean, that SpaceX now is in a position to dominate all communications.
Right, right. Because they have, for people who don't know, they have now of their 6,000 some satellites up in orbit, 100 over 100 are direct to cell phone devices.
Right.
They can direct devices. They've done tests, 17 megabits per second. When they get the Starship going, making bigger satellites, that will let them make bigger antennas up there, and that will increase the speed of communications directly to your phone, because a bigger signal up there can reach the weaker devices down here. There also will be modifications to these devices where they will have some improved gain, so they can again talk better to the satellites up there. So, but for cities and highly dense urban areas, these things won't work quite as well. But by increasing the volume, you can get very good service up in orbit. Yeah, so that's going to happen.
Yeah. So even though, and then on your regular broadband service, even though Elon has always said that he was only planning to try to make this service available to the remote areas, and that there wasn't enough coverage to do it in cities. That's only a matter of the number of satellites, right? And also maybe tech in the future that would improve the satellites to provide more units of capacity per satellite, or
right,
splitters on the ground or something.
Right. And the other thing you can easily imagine is that they have direct laser to laser communication of the satellites up in orbit.
Right.
So that has no disadvantage against fiber. But by just popping up new nodes, launching them by the thousands, hundreds of thousands, millions with the rockets, then they can upgrade those nodes and improve the lasers so that you could replace the backhaul of the fiber, right?
Mm-hmm.
And if I'm beaming down, okay, I can only get 10 satellites of my million over a particular city. I could go into some other areas, kind of like surrounding it, to help move the data around, and then only the last little bit do I need to concentrate up for a really dense city. Anyway, so there's ways that they can chew out the edges of this.
Right. Yeah. So okay, and then if we get away from Tesla for a minute, at least for now, the next category that you think of always as being the biggest business and getting bigger all the time is medical. And that might be a category where Apple there's a huge emphasis on Apple on medical. That might be an area where they could end up dominating with devices that you wear and the communication directly with the doctors.
I think it's going to be a more the DNA engineering companies, you're using AI to get molecular stuff so that you make complete cures and then go towards totally preventative medicine.
Mm-hmm.
But it has to be a highly biological approach. It basically fix your bodies at the cellular level, at the molecular levels, so that you're healthy, right? But that you will still need to have repeated service, because they don't want to like fix you once and then you're good forever, right?
Right.
Because you will.
Oh no, not that.
Right. Because they want to, otherwise then you won't come back and pay them money, right? But there will be a need for constantly upkeeping and improving your thing, but it will be like maintenance service of your car, where basically you're doing oil changes, you're doing spark plug, other things. If you're doing these changes where the car doesn't break down ever,
Right.
if you keep it maintained,
Right.
But that you have to do maintenance. So medicine will go to this maintenance thing. But if you had it as devices, that would be more for augmentation, where I'm doing like $6 million man, cyborg, that kind of superpower thing.
Right.
And then the technology companies, Apple, Tesla, whoever else could get involved there. But if I'm talking about biological health, then it needs I would see it being the nanotechnology medicine. It's a more deep topic as to how that health would be maintained.
Yeah, so I was thinking more the other side of it. So we now have in our cars, the car is telling us, and Tesla is amazing at this. Like we just had my wife just had the first experience with an actual Tesla service location. And she says, you set it up on the app before you ever go. And when you get there, you just give them the car. And then a little while later, they call you and say you're done. And you're not having to worry about payment. It's all just taken care of. It's because you've all done it on the app before you ever get there. And the whole time you're there, you can watch the car going through the service system. But anyway, but we have in the car is telling us and telling Tesla what's wrong. It's all because it's got ways of
Smart sensors constantly monitoring.
Sensors, right. So that's what I'm talking about with Apple, with the watch, with Ring. I know somebody just came out with a Ring. I've been talking about a Ring for about 15 years, but my original idea for the Ring was to alert you when there was a call when you were away from your phone. But now they're talking about Ring that would give you medical information. So whether it's watches, whether it's rings, whether it's implants, whatever it is, we could have monitoring systems that would provide really early indications of something wrong.
Right. So you're correct in that the Apple Watch is the most successful high volume wearable device, smart device.
Right.
So they have the advantage there. Others are working to, making some glasses, or having devices in the home, like near you. You don't have on your person per se, right? Or having the humanoid bot behind. So that is to be determined what form factor wins, or which ones are in play.
Right.
A watch and having that is something that clearly is successful already and could continue to be successful.
Right. Well, okay, let's get off of our future. And I love talking about the future with you, but because that's who you are known. This is what you're known for. Let's talk a little bit more about the economy. We've got the reading today of the Consumer Sentiment Index. It dropped to 66 in July from 68.2 in June, and 68.2 already wasn't great. And this is according to the University of Michigan. This is their first reading. It is the fourth decline in a row and the weakest reading since last November. It also stands well below a pre-pandemic reading of 101 from February. Yeah, way below that. It says nearly half of consumers still object to the impact of high prices. So while they might understand that the prices are not going up as fast, it's the impact, it's the overall impact that's killing them. Even though they do expect inflation to continue to moderate. But having said that, Americans think inflation will ease to 2.9% the next year, and that's only down 0.1 rather, from the last time, which was 3%. So if the interest rates, if inflation stays around 2.93%, that is still rough on especially folks under 100,000 in income. So it says key details, a gauge that measures what consumers think about the current state of the economy slipped to 64.1 in July from 65.9 in the prior month. And that's the lowest in 19 months. A measurement of expectations for the next 6 months slid to 67.2 from 69.6. And that was an 8-month low. So what do you think about all that? The consumer is out of money. The consumer is borrowing on their credit card. The consumer goes to the grocery store. They go to wherever they're going, and they're paying way more money. They can't borrow money, or if they can borrow money, it's at a high price. They're not very happy right now.
So I think we need until we get some 20%, 30% boost in the economy to offset the 20, 30% increase in prices, then this doesn't really change. So having inflation slow to 2%, and then if there was actually not just one rate cut, right? Let's say in 12 months, there were the equivalent of 250 basis points, right? You don't have to do it a quarter point cut at a time. You could do it, 0.5%, get that moving down, and not do it based upon the banks are blowing up, we have to get the rates down because we're saving the economy. If we're actually saying we have things under control and now we're taking rates down now, and also reducing borrowing costs. So now you can invest and do things, right? You can borrow some money and you can do stuff, that would start helping things. And you have to, if you were to reduce oil prices, energy prices by abundantly creating energy, say, and it's a marginal thing. If I have an oversupply of 2 million barrels, then the price of oil goes down to like $20, right? If I'm under by 2 million barrels, my supply demand under by 2 million barrels, then I can shoot up to like 150, $200, right? So that the marginal 4 million barrels per day is a big thing, which the US can do by itself, right? If they said Alaska, Texas, wherever, go nuts, and I will let you keep going nuts for a decade, right? And do the stuff, which is a policy change. Someone would have to give that policy, perhaps the next president. Then you could substantially reduce your oil costs and your energy costs, which then flows through the economy because all your goods are being produced there. So you can actually cut 5%, right? So improve people's well-being somehow by 10%, cut energy costs by by amount, like oil prices from 80 back down to 20. That could take out 5%. If the tech stuff starts going AI, that could be another boost. So it seems like to majorly change it, getting from 66 back up to 100 in terms of you need to do stuff for like a year, 2 years of really, really good news. Our Good News Friday would have to be like, 50 straight weeks of like, and the news is great. And this point, now we're at 68, now we're 70, getting back up, right? It's not going to be, but we have to start the turnaround. Yeah.
So the All In podcast today, on the other side of that argument, I mean, they weren't making the opposite argument, but what they were saying was, the Fed and a lot of people now seem to be satisfied with this 3%. A lot of people seem to be going, well, maybe we just have to be okay with 3%. And it looks like the 3% is going to be hard to get lower than 3%. Jeremy Siegel was out today saying that he sees, some areas of the economy which are likely to reignite no matter what we do, that they're just they're going to go back up again. That you can't hold them back. I didn't write down the details, but one of those would be housing rents. Rents we got 94% occupancy. That's inclined to get rents up. So what the All In guys were saying was, if we're stuck at 3%, then you can't get your interest rates, the Fed interest rates, under 4.5 or 5, because you need to have that 1.5% real interest rate for people to. So we're already sitting there on 10 years, though it's at 4.2, which either means the people that are buying the bonds either don't think that the inflation is at 3 points, they think it's at 2.7 or 2.5 or something like that, or they're already willing to work on less than 1.5% real rates, which is unusual.
Right. So if you were to deregulate a lot, let people do stuff. So because the regulations, if they cost you 5-10% to do things a particular way, right? You don't have to go to unsafe, but you just like streamline that process, right? And they've started that process with the Supreme Court saying that the U.S. regulatory agencies, EPA and others, we're not going to defer to you.
Right.
If a company says, I don't want to do that, then it can go to the regular courts.
Right.
And if you have courts that were saying pro-business, right, then you could achieve that, right? So you have to change that situation to being a pro-business environment. People can argue whether it's a good thing, but if the goal is, I want good growth, I want us to be able to afford things, I want wages to go up, right? You do that with a deregulated economy, which is like, if you compare the United States versus Europe for most of the last 5 decades.
Yeah.
Europe was generally overregulated,
Oh, yeah.
Oh, I cannot tear down this building. It was where Mozart had breakfast 300 years ago. You cannot take down that building. So it has to stay there forever, and you can't change it.
If
right?
I have more than 200 employees, all of this changes. If I have more than 50 employees, all of this changes. Yeah.
So that's one of the reasons why Americans aren't necessarily smarter than Europeans, right? But if you look at the per capita income, the US, they're at 80%, 60% in the United States.
Yeah.
Right. Even though the education would be, seemingly as good. Right. So if you have pro-growth and deregulated economy, you can get a substantial move. You can get a 10, 20% move over 4 years. Right. So, and be sustainable, because the US higher per capita income, a lot from the deregulation, also from, bringing in educated people from around the world. So that's a H-1B type process where you're getting educated people. You want people who can contribute to the growth economy, right?
Yeah. I was thinking about all this earlier today, and I've been saying for months and months and months now that the current economy favors the rich by a lot. When you have high interest rates, favors the rich by a lot. When you have high inflation, favors the rich by a lot. Your assets are going up. People that don't have assets, they're losing out. They're at the losing end of that deal. If you can't get in to the economy because you don't have the assets to be able to start a business, you don't have the assets to buy a house, you don't have the assets to put into the stock market, you don't even have a chance to get into this inflationary economy that we're in right now. But then if you add to that regulation, licensing and regulations keeps the new people out. It keeps people from being able to open a small business. It keeps people from being able to get into a regulated business that because they don't have the right license. These are all methodologies that keep the rich richer and the poor poorer. And yet, supposedly, and I'm sorry to sound political here for a minute, but the Democrats are supposed to be the party of the working people, but what they're doing is regulating, which hurts people from being able to get into business. It keeps from being able to build houses. Everybody in the real estate industry right now, everybody that's a builder, that's all they're talking about is the permitting, and the regulations are keeping them from building the low-cost housing. They can't build low-cost housing because it makes no sense. So it seems like all of this is working against the folks that make less than 100,000, make less than 50,000. The people that are just starting out in life are starting out with a disadvantage in a world where you have high interest rates, high inflation, and highly regulated.
So if you want a future economy that's good, we can look to the past. And for a long time, you had the landowners and the serfs, right?
Yes.
You had people on the land who do it, but you had these barons, dukes, and stuff like that, Middle Ages, where they had all the land, right? And the people did not own the land, right? They were just hired to work there.
Right.
And then in China, you had communism, where the state owned the land and the people did not work it, right? But when you had land redistribution through whatever means, often violent, then the commoner would have ownership of their land. When more recently you saw that in China in the 1970s, where the people got to own and do stuff with that, not just in the collective where they're like talking about it, right? Like union talking about it, but like, I own it. If I make it work, I get the profits of that.
Right.
And then suddenly China now has 500,000 billionaires, a boom. And it took a short time. Like the first billionaire in China was the Hopewell brothers, who took, I think, quail that had really short life cycles, and they could churn and get, 1 quail 10 to 100 quails in like months, right? Yeah. And then they stacked up, and then got to millions of quails and all that kind of stuff, and they became billionaires. They also got into animal feed and stuff like that. So that's the power of, I own it. I'm going to drive it. I drive this opportunity unique that I understand it.
Right.
So a redistribution in some form where it's not like, okay, I'm just taking all taxes, shoving it into the military thing. It has to be, I'm going to redistribute it and get this over to your side where you own it and you can do stuff. So this could be like a state-owned, a state-driven policy of like, we're going to get humanoid bots, productive robotaxi assets into the hands of people so that everyone can contribute and do stuff instead of just ownership of one company, right? So we're heading to this point where clearly it would be better for that to happen.
Well, I'm going to throw a different example at you. So it
Yeah.
might be like giving big loans and scholarships to students who then use it to take classes that are not economically productive.
Right. Yeah, that'd be
Would that be a good example?
that'd be a good example.
All right. So yeah. So yeah. So anything that we can do to innovate in ways that would help these young folks to become their own bosses, so to speak, whatever.
Yeah.
And I think there isn't a very good model. I think, right. Let me put it this way. The young people that I know are not as entrepreneurial as I remember people being a generation or two or three ago. That doesn't mean there's none of it, because there's a lot of entrepreneurial activity happening at the edges, like in these side jobs, or doing something on the internet in addition to your regular work. What I'm not seeing, so I'm seeing a lot of that. What I'm not seeing is the people that are going out there, as Elon says, and starting a manufacturing business, or even starting, because manufacturing feels like it's dead, or retail feels like it's dead. Importing feels like, how are you going to compete with the big importers? So I'm not sure that there's a solution for that in our hour tonight.
I would say that also goes to the cultural differences, because I think some countries like Taiwan, there are a lot of engineers working in semiconductor companies, in certain manufacturing. China has Shenzhen, where everyone's making stuff. They're the factory of the world.
Right.
Korea has that. Germany, there's a lot of manufacturing, although they aren't as entrepreneurial, right? Because they tend to work at a lot of old money businesses.
Right.
But it's something that, besides, you have to have some cultural component as well. Like was it the Dirty Jobs guy?
Right.
What's his name? Anyway, so he's saying that the trades need to be promoted. You have to have the culture say that this is a good thing, make stuff, and then encourage people to go down that path.
Exactly.
So there's money and a cultural component.
All right, so let's go back. Let's come all the way back to this idea that the consumer's confidence is low, the consumer's out of money. Product manufacturing, goods is actually shrinking, and also the prices of the cost of goods is going down, but experience is going up, services is going up. That seems to be where all the action is. Is that going to be enough to keep us from going into recession in the third quarter? I'm now fully on board. I believe that there will be at least one quarter, at least the third quarter, that will be negative GDP. Fourth quarter, I'm not sure yet. What are you thinking?
I don't know. I think it's close enough where it's like the growth be so slow, or the negativity be so low, that's kind of like approximately zero, right? Whether it's plus 0.5 or negative 0.5, it's like,
Yeah. All right. So you're looking at it being close to the line. One of the reasons why I think it'll go negative is because last year we had this 5.3% jump in the third quarter, which is really, really hard to get over that big hill. The fourth quarter was lower. It was only like 3 point something, but even that is going to be a stretch, I think. So we could be looking at negative GDP for both quarters. It may not feel like a recession. We also have this possibility that I wish I had more, a greater sense of what's happening in the job market. I know that it's a lot easier to find employees now, but I haven't really been talking to people that have been laid off. I haven't been talking to people that know people that have been laid off. You know what they say? A recession is when somebody gets laid off, and a depression is when you get laid off. But I'm not really hearing either one. What about you? Are you hearing anything out there in terms of?
Well, I'm in the San Francisco Bay Area, and there's been a lot of tech layoffs. There's also, the real estate has been bad, and that's hurt the Bay Area because Bay Area had a lot of real estate stuff. So, and the people getting jobs, a lot of part-time jobs, or like contract gigs and that kind of stuff. And the people who want to replace the tech job are taking a long time. So it felt like a recession in the Bay Area for a year or two.
I got it. Okay. All right. Well, that's interesting because I've been kind of, I've been hearing a little bit about the tech thing. Nicholas has also mentioned that on Tuesday night, that he's hearing a little bit in the tech sector of people being laid off and finding it hard to get placed. Okay. So let's just take a quick look here. Friday night, we don't have as much to talk about because we don't have any pre-market, but let's at least take a look at what happened in the markets today, and we can see if any of that's worth discussing. So the Dow was up 247. The NASDAQ ended up only up 115. Everything fell off at the end, and I have not seen any explanation for that other than exuberance, and then falling off. But everything fell off a cliff in the last, I don't know, half an hour. NASDAQ only ended up 115, S&P only 30 at the end of the day. And then Tesla, which had been up almost 10, I think, ended up only up 720. Did you get any feedback, anything that you heard that would have caused that off the cliff at the end of the day? Oh, was this triple witching? Or just options expiring, I think.
Yeah, could have been that. I haven't heard that. Yeah.
Yeah, there could have been some options activity that might have been part of that. The Cathie Woods were almost all up today, although, almost all up today, virtually all up. Yeah, so we basically, I'm sorry, but the Magnificent Seven, because of that drop off at the end, Google, Amazon, Meta, Microsoft all ended up negative today. And not by a couple of them, like Meta, another $14 down today. And Microsoft down a full $1. So anyway, it was it was quite a sell-off. Let's take a quick look at the rest. The bonds. Oh, this is not what I wanted. Just a second here. We got the bonds down 0.6 of a basis point today on the 10-year, and 4.9 basis points down for the 2-year. And what that is doing is we are now looking at well under 30. You got your calculator handy? Sometimes I can do this in my head. Sometimes it's 4.45, 4.18. We're under 30 basis points now difference between the 2-year and the 10-year. And the collapse of that inversion is what commonly people think is what signifies the recession. But we're nowhere near zero. We're nowhere near flatline yet, but we have been sitting at 33 or higher on that 2-year, 10-year, and now we're down into the 20s.
Okay.
Could be a signal. All right, oil. Whoops, oil today. I'm really being fumble-fingered here. I don't know why. Oil today down 44 cents, 82.18, staying right in the same range where it's been. Natural gas up 1.98% to 2,313, also in range. Gold down 5.9, but way up, almost at an all-time high, 2,416. Silver down 2, but still sitting way over $30 at $31.02, but very much, again, close to its all-time high. And copper up 1.66 to 458, kind of mid-range again. Any thoughts on commodities, precious metals, oil, natural gas, any of that stuff I just covered?
I would feel a lot better if a major growth engine that was super reliable and super profitable was driving. So, AI is going great, but it's not the growth engine that lifts all boats. China from, 80s and 90s with the growth engine that lifted things, internet with the growth engine that lifted things. I would like to see something become that, which, could be, robotaxi or space or something, right? So, because if it's fine-tuned, depending upon Jerome Powell to make some right decisions and Congress to do something, then we're screwed.
Yeah, that's okay.
Things muddle along and we're getting by.
The Bitcoin is up 291, and so that means my $10 is even bigger than it was the other day. The euro is unchanged at 109. The Japanese yen is there's apparently they're saying the Japanese are going to have to intervene again, and they're talking about a significant intervention in order to keep the collapse from continuing. And that's it. That's all we have in terms of because we don't have a pre-market, if you will. That was all the action that took place today. Any last thoughts with regard to the market, with regard to Tesla, with regard to anything Elon Musk is doing that is on your passion list?
Partly getting better energies there. FSD, we already talked about. So we're just waiting for FSD to really break out and for some robotaxi licensing deals to happen to get that point. So that hopefully the next few months, hopefully we get a better version of 12.4 and then get the 12.5 and then off to the races.
Right.
Yeah.
You have 12.4.3 yet?
No, I do not. I don't have a Tesla car. I only have a solar and Powerwalls. I do not have a Tesla car yet.
I forgot. So I feel really bad for you. I feel bad for me because I don't have my Cybertruck yet.
Yeah.
Or my wife's Cybertruck, as it turns out. But I feel like if it works for you, you haven't even got your darn Tesla car yet. Come on now.
I know. I have to get there.
But you've got 9 ordered or 10 or.
Yeah, a large number of Cybertrucks ordered.
Cybertrucks ordered. Okay, all right, okay. All right. Hey, listen, Brian, thank you so much for coming on Friday night and taking Larry's spot, which reminds me, though, Larry will be on tomorrow sometime. I want to warn you in advance. It may not turn out that we do this like at 9 in the morning tomorrow because Larry's got some other obligations, but we will be covering the Cathie Wood monthly report, which is a week late because she didn't do it last week. We'll be covering that tomorrow. That'll be out for sure. We've got a Brian White video that's going to be coming up tomorrow. And then of course, I'm going to put a card right up here for what? For that, I'm going to continue actually did a CERN basher today. That's what I'm going to put up right there. That CERN basher, people were very excited about it. A lot of people watched that video, but maybe you didn't. So I'll put that card up right now. All right. So again, Brian, thank you so much.
Thank you.
To all of you out there, it's been great talking to you.